What if I told you that you could sell an investment property, walk away with a big profit, and pay zero capital gain tax legally? That's a 1031 exchange, and most investors are leaving this money on the table. Hey, it's Emily with Keller Williams La Jolla. If you own investment properties here in San Diego, a rental, a duplex, a commercial space, this might be the most valuable 5 minutes you watch all year. Today, we are talking about the 1031 exchange. So here's the problem itself. Let's say you bought a rental property years ago, it's gonna way up in value, and love to sell moving to something bigger or better located. But the moment you sell, the IRS wants its cut. Capital gain tax can take serious bite out of your profit. For a lot of investors, that tax bill the only reason they don't sell. The 1031 exchange, named after Section 1031 of the tax code, lets you sell that investment property and roll all of your gains into a new one and defer the capital gain tax. So your money keeps working for you instead of going to the IRS today. Now, there are rules and they are strict, so stay with me. First, this is for investment or business property only. Your primary residence does not qualify. So your family home is sold, but rentals, land held for investment, and commercial property are in. Second, the properties have to be like kind. The good news is for real estate, that's very broad definition. You can exchange a single family residence for apartment building, raw land for a strip mall, a San Diego condo for property in another state. As long as both are investment, rental estate, real estate, you got a lot of flexibility. Third, and this is where people get tripped up, there's a clock. 2 clocks actually, and that they run the same time. From the day you close on the sale, you have 45 days to identify your replacement property in writing. You have total 180 days to actually close on it. Miss either deadline and the whole thing falls apart and the tax comes due. There are no extension for I was busy. Fourth, you cannot touch the money. The proceeds from your sale have to go to a neutral third party called qualified intermediary who holds the fund and moves them into new purchase. If that checks every lens in your bank account, then IRS treats it as a sale, and then the tax benefit is gone. So why is this such a powerful tool? Because investor can do it again. Sell, exchange, sell, exchange, building bigger and bigger without paying tax on the way. There's even an old saying, swap till you drop. Because under current rules, if you hold those property until the pass them on, your heirs will receive a step-up basis, meaning all that deferred gain can essentially disappear. That's a compensation for your estate planner, but it's a big reason this strategy is so popular. Here's the bottom line. A 1031 exchange can be the difference between trading up your portfolio and handing a chunk to the profits to the IRS. But the deadlines are unforgiving and the setup has to be done right before you close the sale, not after. I'm a real estate agent, not a CPA or tax attorney, so the tax specific should always go through a professional and a qualified intermediary. But the timing of all this lives in buying and selling, and that's exactly what I can help my clients. The key is plan the move before you list, so we can line up your replacement property and hit those windows. If you are thinking about selling and investing property in San Diego, comment 1031 below or DM me and let's map it out your next move before the clock starts.